Good afternoon, everybody. Uneducated Economist here. So I wanted to talk a little bit about money market accounts and gold. I found two articles that I thought related to each other and really don't have anything to do with each other in the sense of what they are talking about, because one's talking about money markets and the other one's talking about gold. But both of them kind of relate to each other in the sense that both central banks and the banking system want to be very close to cash. Now, money market accounts, if you're not familiar with money market accounts, this is basically the short-term lending that is at the beginning of the financial credit markets. So like municipal lending, corporate lending, these things happen on a short-term basis in the money market accounts. So an investor who wants to park cash somewhere, like they want to have easy access to cash, they want to collect a little bit of interest rate off of it, they can park it in a money market account. It's like a glorified savings account. And for a little bit of risk, they get a little bit better interest rate. But this risk is generally pretty low. It's short-term stuff, like short-term municipalities, short-term bonds, short-term, commercial notes, stuff like that, where it's highly liquidable. After the great financial crisis, they put rules and regulations in these money market accounts that says that you cannot have any more or any less than 30% of your portfolio in a asset that's liquidable within a week. Okay? So if you have a money market fund, at least 30% of it has to be liquidable within a week. Goldman Sachs has taken that position up to 85%. They are pretty much sitting so close to cash, they might as well be in cash when it comes to these money market accounts. And I thought to myself, why is this? And of course, when they read in the article, they say that they're doing this leading up to the election. But at 85%, they must have a lot of confidence that there's going to be a liquidity crunch coming into the future and that they need to be positioned in such closeness to cash that they're almost in cash itself within a week. Now, when you relate that to the other article that I had found talking about how central banks have become net sellers of gold. For 10 years, it seems that central banks have been nonstop buyers of gold until just recently. And a lot of these countries, Russia and Turkey and some of these other nations, are starting to sell some of their gold. And I got to thinking about that for a little bit, and it was like, why are these nations selling gold? That doesn't make any sense when you have this dollar deterioration happening, where you have the Federal Reserve printing up ungodly amount of money. Why would it be that the central banks out there have found that they need to sell their gold off and get into a cash position? Why does Goldman Sachs feel like they need to be in a cash position? See, this is what I was talking about. This is why I feel that there is going to be a dollar bubble at some point in the future, is because these guys are seeing that they need to be in very close to cash. All right? And so you think about it. Once the crash starts happening, what is it that people want? When their stock portfolio is falling, when gold is falling, when treasuries are falling, when everything is going down in price, what do people want to be in? They want to be in cash. They want to cash out. Cash out before the crash. So when things are crashing, that means people are getting into cash. Almost always. And I don't see how this is going to be any different. And as we lead up to this, it just seems that more and more likelihood of there being a dollar bubble just seems to grow with me. Even though it seems counterintuitive, that kind of logic, considering what the Federal Reserve is doing. It's hard to wrap your head around that there is going to be an endless amount of printing and a demand for dollars that causes the dollar to bubble. I have a feeling that this is what's going to be taking place here soon. So I will leave a link down in the description for you guys. And I would love to get your thoughts on that. Uneducated Economist, you guys let me know.